Hello traders, Day Trader Matt here with a businesswithtrading.com doing a trading strategy recap for Monday the 2nd of February. And today was a really good day. Didn't expect today to be as good, but it's always a great thing when it is that good. We can just carry over, what we're doing in the markets and just continue adding points to our already great year that we're having. Today we took, quite a bit of trades. We took 6 trades, but we ended up pulling 22.25 points out of the market. So very good day today, and it's always great when you have days this good. So let's say, one contract you're looking at $1,112.50. Most people probably wouldn't complain about that within a 2.5 hour period. I do all the pregame analysis. We talk about it a little bit, and we go. I call the trades, and we make them happen. They don't always happen this good, where you have 6 trades for 22.25 points. Sometimes we lose money, but that's part of trading, and we try to maximize what we do as much as possible. So let's look at what we actually did today. Our first trade happened quickly off the open. We grabbed a long at 2.75, right about here. Price did come a little higher. It started to come down. We ended up taking profit around 4 even. Price came back down a little more, and then we grabbed another long around 8 even here. Price came up, and we ended up getting out around 0.5. So as it rolled over, that's when we got out. As it started rolling over, we got out. Price came down. We grabbed another long at this time at 5.75, which is right here. And as price went higher, we were able to get out as it rolled over. It hit our stop that we moved up, and price came down again. It was interesting. So 3 quick trades right there, 3 very quick trades. Price came down and moved around. We did get long on this candle right about here, actually. Price came up. We were able to take profits into this, and price came down, chopped around a little bit. We're watching things over here. We did get long, which was at actually up here. No, I'm sorry, it was at 5.5. Okay, it was right here. 5.5 was right here, and we were able to ride that up and take profits right about here. So very nice trade from down here to up here. So very nice trade. And then we watched things a little bit. We were able to get long again right at 2.5 right here, right about here. So we got long right here, and we were able to ride that up and take profits up in here. And then price obviously came up a little bit more, and it is what it is. I always say, I'm not the person that looks the top tick or bottom tick of market. The top 10%, bottom 10%, that's the difficult thing to get. That's not what I'm looking for. I'm looking for a high probability setup that I can take, that I know over a set period of time that I will make money on. And that's basically what I do. That's what I teach. The trading courses go in very granular detail into my system, into the style of trading that I do. We talk about it a little bit, in the room and whatnot, but I don't have a lot of time. And spending my time explaining something, or spending my time waiting on a trade setup and watching that trade setup to make sure it's that we're going to be able to take that setup. I would rather spend my time on that trade setup. Now, if there's nothing setting up, yeah, we can talk, definitely, and we do that. But, if a trade is starting to set up and it's looking like it's wanting to set up, putting all my focus into that is the best thing I can do. Because if we're talking about something and I'm like, oh, it looks like a setup, but I'll continue talking. Let me just throw out an order, see what happens, see what. That's not really, how you trade. Trading is very intense, it's very difficult. Anyone that tells you that it's not difficult, you shouldn't listen to. Trading becomes easy over time, yes. But is it ever not difficult? It's always difficult. I don't care how long you've been trading. I've had bad days. I've had bad trades. You guys have seen me do bad trades. Especially people that have been with me for a while. You've seen me do bad trades because it happens. It's part of the trading business. You're going to have days that are not very good. You're going to have days that after they're over with, you're going to want to go hit a punching bag until your arms don't move anymore. You have to get that stress out sometimes. And some days are a lot more stressful than others. It's how we deal with that really makes us traders. That's one thing that I really do go in depth with my trading courses. In the E-mini trading course, I have a trading mindset section that just goes into all of that. Because I've probably experienced just about everything. When I first started trading, I had a punching bag in my office. And I could take a break and just, beat the living crap out of it. Because sometimes you need that. But then after you're done, you take a few minutes to compose yourself and you can sit down and trade again. But you don't want to hit a punching bag and then just sit down and start trading. You need to allow your heart rate to settle, to get low. Because if you hit a punching bag, your heart rate's going up, you can barely breathe, you're taking in really deep breaths, and you sit down and start trading, that's horrible. So there's a lot of different things that you can do to help yourself becoming a better trader, to get that stress out really fast. But, it has to be done in a way that is conducive, to helping your trading becoming better. And that's where all of that comes in. I've had some questions about that. I also had some questions on why I don't do any free webinars. Because to me, my time's valuable. Not to say that, doing a webinar here and there wouldn't, be fun and helpful. But, for me right now, I take phone calls. If somebody's interested, I'll take a phone call. I do a lot of training, and then I do the trading room, the option service, and the swing trading room. It's all fun for me because I trade all of those. I trade futures, I day trade ES, I trade options. That's what I've done for a very long time. I'm not sure which one I started first, options or futures. I'm pretty sure I started trading futures first. So stocks first, then futures. Then I started getting into options shortly after that. Just because I could not see myself day trading stocks. I'd rather stick a sharp stick in my eye. But day trading futures, I enjoy. And then instead of swing trading stocks, it became swing trading futures. So that's what I liked. And then options were just a different instrument. And it just became a lot of fun for me because it's challenging. I'm a person that thrives on challenge. And, I just really, really enjoyed it. But, hopefully that answers those questions. I wanted to talk about that a little bit just because I've gotten some questions. And, if you have any more, keep them coming. If I didn't answer it in the way you wanted me to answer it, then, definitely shoot me out an email. Be like, could you clarify this or clarify that statement? Whatever. Something like that. If you want to email me, support@businesswithtrading.com. All emails are welcome. You can also give me a call, that's fine too. And now I want to talk about a couple swing trades. We had a swing trade video that I do a video every day after the market. And the Sunday video that I did, actually recorded before Sunday, we were looking to get long oil, and we ended up, our target got hit. Let's see, was it Sunday night around 2020? So 8:20. Yeah, about 8:20. And we were able to ride that up into our first take profit level at 49.80, which gave us 3 points in oil. So one contract, $3,000, not too bad. We have our next stop down here. Worst case scenario, we will end up with $1,000 on that other position, which it looks like might happen just because it's starting to get kind of ugly here. But wanted to show that was a really nice trade. And then another trade I wanted to show, if I could type the symbol in correctly, is coffee. Coffee we talked about a while ago. I blogged about it. I don't know why this line is here. Let me take that off. And let's zoom in a little bit. Alright, we talked about it, and I blogged about it last week. I sent out a tweet last week. And, so we were looking at this area. So we had an order at 163 and an order at 163 half. And from there, we had our first take profit order at 160. Alright, so at 163 quarter, we had a 1 point stop, which comes to, if you're doing 2 contracts, like we usually trade in multiple lots. So one half size here, half size there. That's usually how we trade. Every now and then, like that crude oil for example, all in here, this is our stop. And other times, like this coffee trade for example, half here, this is our stop. And we always average. So averaging these two would give us 163 quarter. We were risking 750, assuming 2 contracts. So each side 1 contract. Of course, we trade depending on your account, usually more than that in the service, and it really depends on the size of your account. I don't say you're going to trade 3 contracts here and 5 contracts here. Some people may trade more, some people may trade less. I just recommend a specific allocation. I recommend this, not as a per trade thing, but as a overall portfolio thing. I recommend this. So anyway, not to get into too much detail, we were risking 750 there. Okay, 750, not too bad. And we took our first profit at 160. So let me do the math here. I don't know, after the Super Bowl Sunday, I think my brain doesn't really want to do math that well at the moment. Alright, so first trade, we're looking at $1,218.75. Now that's risking 750. So that's not too bad. And then on this next one, we had our stop in at 162.80. So that gave us 168.75. So not too bad. We got stopped out pretty quickly. It is what it is. There were a couple of ways to do this. We could have moved our stop down as this market was moving down. I just decided to keep it here. It is what it is. We'll see what happens, and it actually did come up here, so we can enter a new trade probably sometime this week, but it actually will be quite interesting. So looking at 1218 plus what we made on this one, approximately 1386, 1387, while risking 750. I wanted to show that just because most of the trades that I've shown, most of the trades that we've done lately have ran really nicely. This one came back, so risk reward was a little less than 2 to 1 on closed P&L, because that's all that really matters, is closed P&L risk reward, or reward to risk, however you want to word that, it doesn't matter. But a lot of traders say, well, I'm going for a 3 reward on my risk, but in looking at it, you're like, there's no way in hell that's going 3 times your risk. It's most likely going right here, and you're trying for here, so you're going to get stopped out, most likely. Not every trade is set up to go that far, so you have to be able to manage your risk. That's much easier said than done. It's difficult. Some of the books out there that teach you money management are not worth the paper it's printed on. I don't. Some of them might be good. I haven't read every book out there, and I'm not going to read every book out there. I don't really read a lot of books on trading per se, because I already know how to trade. It would really be a waste of my time. I try to keep up with certain things that are out there, and none of them make any sense. People ask me all the time, why don't you trade this? Why don't you trade like that? Why don't you trade market profile? What do you, blah blah blah? Because all that stuff is useless. It's just extra crap to put on your charts. Yeah, that's my opinion. There are many ways to trade, and I know there are many different ways to trade. I trade a way that works for me. I've worked with other traders who've come to me, they've had a system. They know that it can make money, but they're not making money at it. I've helped them with that, and they are now making money. I've had traders come to me, they don't have a system. I've taught them my style, and they're making money. So I'm not saying one style is better than the other, but I think, at least me personally, the more simplistic the approach, the better. And the less stuff you have to look at, the better you're going to trade. And that's a fact. I don't care what you say. That's a fact. It's been proven through neuroscience in so many different studies. And I'm not talking about, BS education studies. Harvard studies said this. I'm talking about real life studies. And there's a huge difference. You read all these bullshit studies that say this is this and this is that, and they were done by some MBA students on something like on rats, for example. And you're like, oh, okay, so that study really doesn't really mean anything. And a lot of studies are like that. They just don't mean anything. They've been done, but they've been done to the point where they don't have any application to real life. So anyway, I wanted to talk about that a little bit, show what we did, show a couple trades, answer a couple questions. Hopefully you enjoyed the video. I know it's a little bit long, but it is what it is. I had some questions, and hopefully you guys enjoyed the video. You can always leave comments below. You can also email me directly, support@abusinessoftrading.com. Also, feel free to call the office if you have any questions. No such thing as a dumb question. With that, thanks for watching. Have an excellent rest of your day, and I'll see you back here in the markets. Thank you.